In this video, we are going to talk about the risk of doing business in Nigeria. So before starting, please like this video and subscribe to this channel for future updates. Following 2020's lockdown, which caused the worst recession in 33 years, Nigeria's economy performed well in 2021. The National Bureau of Statistics (NBS) has reported that Nigeria's GDP rose 5.01% in real terms in the second quarter of 2021, marking 3 straight quarters, following the second and third quarters of 2020 had negative growth. Compared to the first half of 2020, actual GDP has increased by 2.7%. However, compared to Q1 2021, real GDP shrank by 0.79% in Q2 2021, showing slightly slower economic activity due to seasonality. The service sector, which accounts for roughly 55.6% of GDP, drove growth, while the commerce sector drove growth, accounting for around 64%. The commerce sector, which now contributes roughly 16.66% of GDP, expanded 22% in Q2 2021, the fastest since 2016. However, Mr. Bismarck Rewane, CEO of Financial Derivatives Company Ltd., warned that Nigeria's positive gross domestic product, GDP, has yet to decrease. A big impact on the economy. The COVID-19 closures hit the fastest growing sectors the hardest. They are job elastic and can boost productivity. Real GDP, 2.7%, constantly falls short of potential GDP, 8.3%. Still in a recession. The population, 3.2%, outpaces the GDP. Nigeria is still the world's poorest country, with 93.9 million people living in poverty. Youth unemployment is approaching 45%. 50.68% poverty. FAO and WFP say Nigeria is a hunger hotspot. 18,000 Nigerians seeking shelter, more doctors moving to Saudi Arabia, he remarked. But GDP growth is a cure for the economy from a series of disastrous policies that have harmed ease of doing business and investor confidence in Nigeria, such as the border restriction, which has stifled cross-border trade between Nigeria and its West African neighbors. The 2019 Nigerian border shutdown damaged Ghanaians and nearly bankrupted many Ghanaian export enterprises when their goods were detained at the Seme Gate for months, according to Ghanaian Foreign Minister Shirley Iorker Bachwe. A separate statement said the levy on traders, including Nigerians, was levied owing to Nigerian actions, including blocking the border. Nigeria's investment performance compared to other African countries. As a result of the current GDP report, Nigerian Minister of Commerce Niyi Adebayo told investors that the country's economy is improving and foreign investors are making serious promises. European, Chinese, Moroccan, and UK investors have made substantial pledges, and our administration is working tirelessly to turn these commitments into initiatives that benefit our nation. The minister's remarks came at a good time, as Nigeria's economic growth has slowed compared to other African countries with less foreign direct investment. According to Nairalytics, the Nigerian economy grew by only 0.7% from 2015 to 2020, while Ethiopia's economy grew by 8.43%. The Republic of Niger placed 10th in terms of average GDP growth throughout the time, whereas Nigeria ranked 39th in terms of average GDP growth. Ghana increased 4.45% during the same period, whereas Kenya grew 4.625%. FDI went where it could find superior comparative value. A recent study by the National Bureau of Statistics (NBS) indicated that in the second quarter of 2021, Nigeria received $875.62 million in foreign capital inflows, decrease of over a year, with FDI at its lowest level in almost a decade. FDI declined to $77.97 million in the second quarter of 2021, down 49.6% from $154.76 million in the previous quarter and 47.5% from $148.59 million in the second quarter of 2020. Money returned home by Nigerian workers declined 24% in the first quarter of 2021 compared to the same period last year, $5.6 billion. Last year, as Nigeria's monetary issues persist. Risks associated with doing business in Nigeria. One of the major reasons undermining investor confidence in Nigeria is the lack of governmental direction and coordination. Insecurity is a major issue. Aside from armed militia group feuds, piracy in the Gulf of Guinea accounts for 32% of all documented instances. 50 crews kidnapped and 1 crew killed. First SEM 2021. Despite the FG's attempts to combat piracy through the Deep Blue Project, global marine insurers stated Nigeria's coastal waters remain the most risky in June. Mr. Roberts said recent FG efforts were not adequate to give personnel, owners, or insurers confidence. Until this is explicitly abolished, Nigeria will remain a classified area, he cautioned. In August, major international shipping corporations announced plans to combat piracy and marine dangers on the world's most perilous trade routes, including the Gulf of Guinea off Nigeria's coast. The Gulf of Guinea is the biggest conundrum for piracy ships, said Jacob Larson, head of maritime safety and security at BIMCO, one of the world's major shipping groups. Nigerian seas clearly provide a worldwide underwriting risk, harming the maritime sector and the import-export commerce. Foreign retail chains leave Nigeria. ShopRite, a prominent South African retailer, said earlier this year that it would sell and depart Nigeria. Nairametrics reported in June that Ketron Investment Limited, a Nigerian business backed by a group of institutional investors led by Persianus Investment Limited, has announced the purchase of ShopRite Nigeria's assets, FCCPC. Using the company's financial statements for 2020, ShopRite Nigeria lost roughly $1.98 billion in 2020, compared to a loss of 8.85 billion naira in 2019. Last month, Massmart revealed plans to sell assets in West and East Africa, joining rival ShopRite in selling 14 outlets in Nigeria, Ghana, Uganda, Kenya, and Tanzania. Managing Director Mitch Slape said Massmart is abandoning Africa's largest market owing to currency volatility and declining consumer demand. He stated that exiting Nigerian and East African markets will result in a 750 million rand, $50.24 million, annual profit before interest and taxes. Conclusion. Nigeria ranks 131st in the World Bank's Ease of Doing Business Index. Nigeria's conservative political climate, bad currency controls, failure to build basic infrastructure, diversify the economy, and improve capacity all harm business. Exportability. The recent ban on Twitter and the recent crackdown on fintech, first by the Securities and Exchange Commission, then by the Bank of Nigeria, serve as constant reminders to potential investors of the volatile business environment in Nigeria, and why they may continue to flee to more business-friendly neighbors. Are thinking to start a business in Nigeria? Let us know in the comment box below. Please like this video and subscribe to this channel for our future updates. Thank you.